It's August 10th, 2020, Monday, brand new week and opportunities for us to reflect on the financial and capital market and how they continue to impact our economy. Today we're looking at the equities market, developments in the equities market, and with us to discuss around this is Mr. Charles Fakrogha. He's the Chief Dealer, City Code Investment and Trust Limited, and he joins us today. Nice to have you, Mr. Charles Fakrogha. It's been a while and nice to have you back to discuss around the capital market.
Yeah, thank you for having me.
Yeah. And how has it been? Because we hear so much talk about the new normal. This is definitely 3 months since the business continuity plan for the exchange was implemented. You've been working more from home. What has been the experience like? What are the new things you're learning apart from the fact that you engage in the market?
Yes, thank you very much. It has been quite very challenging.
We must admit, because when the whole thing started, most of us felt maybe the next few weeks or a month, everything will come back to normal. But as the days trading proceed, even took the NSC some time for them to now realize that it is no longer business as usual. They have to really encourage their daily members to trigger their business continuity plan. But one most important thing they did then was in fact, we thought it was not possible, or they were going to ask the members to pay much money. But we were surprised. They encouraged everybody, as long as you're a trader, to bring your device to them for them to format so that it will be able to meet up with the new normal. And it was done free of charge. So and that has made us to continue trading wherever we are. And though I will tell you, some firms have resumed partially. Some firms in Lagos Island, even in VI, they have resumed. They trade from the office, but virtually majority still operate from wherever they are, and they come to the office maybe once or twice a week. All this in a bid to meet up the COVID-19 protocol. But the challenges have been, one, in terms of data, in terms of the infrastructure, in terms of power, because it's not easy in this our environments to do this online issue. Before you know what, the NEPA will have a power shortage and thereabout. So, but in the whole, I think the dealing members firms have really navigated the new challenge, and most of us are coping. But of course, there is a reduction in so many things we have been doing. Like those who come to the office, nobody comes 5 days a week, so 2 tries a week, and at least we're able to maintain that level that will keep us in business for a very long time.
Yeah, and remote working experience has become like a major issue that companies and even infrastructures and exchanges are looking at now. We know of tech companies that are discussing around their employees working even until next year from the remote working strategy. So for you, do you see the exchange engaging your community to say that for some, we may still maintain that level and look at early next year to resume full operations? Do you envisage that, considering the fact that in the course of this, we still discussed around the concern of the second wave?
Okay. Yes, you will even note that the NSC has been able to run a program that I'm involved with, the capacity building of training of new brokers who have qualified. And initially, we thought this cannot be done by the online portal. We used to do it face-to-face, where you train new brokers for about 15 days to enable them to trade. You get familiar with the technology to run. As I speak to you, the program is ongoing and it's going to finish by tomorrow, where in the comfort of my bedroom, I was able to train the new qualified brokers on how to handle the extreme engine. So we can see that it's like it is becoming the new normal. It's becoming the normal now, because from my interaction to even come to the exchange, because they were able to assess the trading engine live. And I was also able to assess it, and we could also simulate the training environment. And we're able to do this. So I'm seeing a situation where the exchange will make this as than if need be, okay, then they can now say traders can come once in a while to the trading floor. But we are getting used to the new normal. You can imagine doing a training, a technical training from the comfort of your bedroom, and over 40 students in different locations all over the world, all over the country are listening. And when you give them instruction, take your mouse, open to this platform, this is how you buy, this is how you sell. I will share my screen. They share their screen technically possible, and the technology guys are telling us they could still improve on what they are doing. So it's like the pandemic, though as it's negative, we are seeing some positive aspect of it. And so the NSC is going to make it a new normal. So most of this online training we are doing now, I don't see it leaving us so soon. We are going to continue with it, even when a vaccine is developed for the virus and people can still meet together face to face. They will still be encouraging people to do this online strategies.
Strategy, yeah. Well, that's quite remarkable to hear, because even the ability to train brokers, new brokers online, is an attestation to the fact that the digital infrastructure has really paid off to drive market activities. And so that's another laudable step taken by Nigeria Stock Exchange and your community of dealing members, trying to ensure that seamless operations are bound and continue amidst the fact that we are taking caution of the COVID-19 pandemic. Let's look at the review of last week activities in the market, taking from Quadra's research that sent in their analysis published on ProShare Nigeria. It said it was a bullish momentum for the previous week and was sustained as investors continue to react to a better than expected earnings and bargain buy of relatively cheap stocks. So specifically, Guarantee Trust Bank with plus 8.2%, Stanbic with plus 10%, and Seplat plus 12.8%, and Zenith Bank 3.7%, with the primary drivers of the overall market gains for the previous week, with the all-share index closing at 1.4% higher at 25,014 and 41.89 points. Year-to-date loss remains at minus 6.7%, and the performance across sectors within the coverage of the market are broadly positive so far. Banking is plus 4.9%, oil and gas is 8%, consumer goods is plus 0.7%, and industrial goods plus 0.1%. Well, the insurance index recorded minus 0.3% as the sole loser. That's another concern.
Yeah.
And so what would be your take in terms of this improvement? I mean, across board, we're seeing banking, oil and gas, consumer goods, and even industrial goods showing those positive signs. I mean, last week was positive.
Yes, what we saw played in the market last week was not unexpected. The equities market has been doing a little bit not too good the previous week, and virtually most of the equities, most of the securities there, their prices have gone so low. And we started seeing some of the companies sending their numbers, that's the Q2 numbers, to the market. Yes. And in expectation for that, most investors try to position themselves before these results are finally out. However, we have seen some of them that have come out. You can also see that it was surely bargain hunting, because the prices were really low, and investors wanted to really take advantage to position themselves. And you can see that all the sectors virtually was positive, except the insurance sector. So there is a view, there is an optimistic view about the remaining part of the year, that if these companies churn in their H2 results, obviously they have seen the Q1, they expect the Q2 to be a lot more better. And of course, once that occurs, Of course, with some little improvement in the macroeconomic environment, then we are going to see positive in the market. So that was why the market last week, we saw some positive. It could have been better, of course, because of some of the constraints that are still there. Yeah, the macroeconomic environment is still a little bit uncertain, and if that is improved upon, we're likely going to see
some
moving forward. We're likely going to see the tempo to be maintained. Yeah, yes.
And still, Kodos Research advises investors, the market players, to favor cautious trading. That's the emphasize cautious trading, as risks remain on the horizon due to the combination of increasing number of COVID-19 cases in the country, and like you just said already, weak economic conditions. Does they advise investors to seek trading opportunities in only fundamentally justified stocks? What would you add to this? Do you agree solely with this? And what would you add in addition in terms of this week trading activities? What do you like investors to watch out?
I agree with that research because I've gone through it. I agree with that research, and I think it is very obvious. And I'd always maintain that school of thought that for any investor to invest in the market at any point in time, you should look at your risk profile. You should do your risk assessment very well. You shouldn't just invest for the sake of investing. So I'd always advise investors to look at that very well. But at any point in time, there are risks in the markets. Whether even macroeconomic conditions are okay, everything is fine, you still have some risks that are inherent in the market. And the average investors should be able to identify that risk peculiar to them, look at their investment objective, and select stocks based on their investment objective. And of course, it has to be the securities or companies that have strong fundamentals, because at any point in time, once you invest based on strong fundamental, you might never really go wrong most of the time. However, that does not mean to say that a company with strong fundamentals might not have challenges in the course of their operation. But we're advising investors, be very cautious. It is even more now, like you have said, the increasing case of COVID-19 can result to the economic environment being more volatile and becomes a little challenging, and that obviously will affect some of the operations of the quoted companies, which will now impact on investors' investment decision making. What I will add to that Kodros research will be the operators should continue to imbibe and operate by the rules and regulations. We need that now. We need transparency. We need integrity, because at this crucial time, we need to show that the market is run transparently. The market has rules and regulations, and the regulators are up to their game in ensuring market surveillance. Because at this period, we might want to see some people trying to do some little infractions. And because of the challenging times, it might be a little bit difficult for regulators to spot some of these infractions. So the operators like myself and my colleagues, this is the time for us
play by the rules,
to rise up to the occasion and ensure that and the regulators will also step up their game in ensuring that it's maintained, the market is being surveyed very well. So that time. We see last week, we saw some insider trading where the people involved had to make that disclosure. So these are the kind of things we are talking about. That no matter the challenges now we're experiencing, we should be fresh. Every disclosure, anything that needs to be disclosed to the market that are price sensitive, maybe a chairman or a director is buying more shares or is selling his shares, the general public should be aware. And I'm very happy that we saw that happening last week, where some directors were buying and they disclosed to the market generally.
That's very important, because transparency, like you said, and playing by the rules according to you and your colleagues, it's very important to instill confidence in the market and make people know that, yes, people are playing according to the stipulated rules. And I guess the Securities and Exchange Commission, with its new leadership, Laji Lamido Yuguda and his team, they've been working around the clock. They've said that they will strengthen market surveillance, and those who are found to have flouted the regulations or stipulations for playing by the rules will be made to face. I believe that where that happens, we hope to see that where people flout the laws are brought to book, it will strengthen market confidence. Mr. Charles.
Yeah.
Yeah. So let's look at the recently issued guidelines for the Nigerian Stock Exchange. Of particular interest to me was that has to do with collaboration with fintechs. As an operator, how would you assess that guideline?
Yes, that is really timely. It's a right step in the right direction.
Already has passed to receive this as just or daily members and provide them. Yes.
Okay. Like I said, it is time.
Mr. Charles, can you hear me?
Following, a lot of people have done a representation from these young fintech companies. In fact, the exchange has even organized a competition where the various fintech, they came and did a representation. Of course, the SEC was there too, and it was very engaging, very enlightening, and we're so happy. But the fears that we had operators was, are these things not going to really infringe on the markets as a whole? And that was where NSE came up with this regulation. Mind you, SEC in their last CMC meeting have a full committee on fintech and the financial markets. The roadmap, they have that already.
Committee,
Which is chaired by an ex-ED of the stock exchange. So you can see they did the extensive work, identified the challenges, and the way forward. Looked at even from other clients how it is being done, and how it has impacted and deepened capital markets and financial markets overall in other clients. And the NSE coming specifically to put these rules and regulations down. You also know that it's a draft rule. They still need the contributions of stakeholders and the general public before it becomes a rule. And of course, even after that, the National Council of the Exchange will have to approve it, and of course, SEC. Yeah, the rule is simply trying to protect both the fintech companies and the operators, because the NSE is trying to regulate the fintech companies indirectly by saying that, if you look at that rule very well, and so I happens to also serve in the Rules and Regulation Committee of ASHON. So it has been brought to our committee. We have looked at it, and we have seen, we have looked at it and made our own contributions. Yes, ASHON, Association of
ASHON and CIS are looking to that too.
We've also had our own draft rule, so we are expecting the NSC to finalize it and get the necessary approval. You can see that it is basically protecting the integrity of the markets. And if you are going to introduce, very important, a new infrastructure, a new product, new services that will be driven by technology, then of course, you cannot have to lose your guard. Risk management control has to be in place. So, and very importantly, it was also stated that the board and management, senior management of the daily member firm must understand that online platform. Because if you say you are a director in a daily member firm, I don't understand what they do in terms of their operation, then it's difficult for you to do your oversight function. So the fintech company, daily member firm, must ensure that their board and senior management understands the operation of that platform, and it makes it easy for everybody. Then at the same time, if there are infractions here and there, then of course there are sanctions. that has been put in place by that rule and regulation. So I think it is going to have a positive impact in the market. It's going to deepen the market. It's going to include more and more people in the market. And at the same time, it's going to drive the bottom line of this member firm because they're going to reach more and more people with using technology. And that obviously will improve on their bottom line and they will continue to operate. Again, I also want to emphasize that that rule spells out everything completely in terms of the relationship between the fintech company, the dealing member firm, and the position of the NSC. So I want to see more and more of these engagements, more and more of these engagements, so that more and more dealing member firms,
interactions.
Yeah, interactions, so that more and more dealing.
Charles, can you hear me? We're having slight challenges getting Mr. Charles Fakrogha. It's a virtual experience, part of the challenges as we improve technology. But Mr. Charles has been speaking around developments in the market. Can you hear me now, Mr. Charles? Okay.
Okay, and improving the market generally.
Okay, so Mr. Charles, in just a minute, can you give us your assessment currently of the...
Okay. Okay. Hello, can you hear me?
Yes, I can hear you. I'm saying that the corporate results have been coming in second quarter 2020, and we are seeing interesting developments around those reports.
Yes, hello.
Results. So, yes, can you hear me now? Mr. Charles, can you hear me?
Okay, I can hear you now. Yeah.
Okay, so we've seen results for second quarter 2020 coming in for quoted companies.
Yeah,
in just a minute, can you give us your assessment of this result? What has stood out for you so far across all the sectors?
Yes, I was particularly impressed with the results of providers, one of the telecom providers. They're even paying an interim dividend, and that's encouraging. Quite a few others which I can't even mention now have also been quite impressive, and I think it is good. And I'll still maintain, looking at the operating environment in which we're operating, if they still come up with this kind of result, it shows that they are doing all they can to ensure that you operate efficiently, at the same time give a good account of themselves to their shareholders. I think the results are quite encouraging, and we just hope and believe that more and more of them will be sending their numbers to the market, and we'll see encouraging.
Yes, they have to align with the governance structure and, of course, the guidelines of sending their reports for accountability. While several had even sent, just one company had
issued a profit warning, which eventually has posted this result of loss, which is part of the transparency that we also look out for, continuous interaction with the market on their activities. Yeah. So the potential second wave of COVID-19 hitting the globe is still there, and the global markets are seemingly bracing up for that. How would that affect frontier markets like Nigeria, a potential second wave of the COVID-19?
Yes, you all agree that the federal government, through its task force, NCDC, the various state governments, they are doing all they can to ensure that the pandemic is under control, but we must give them kudos. I know they could have done better. Yes, but the issue there is sustainability of this response. For my own personal opinion, I think they have done their best, and that the pandemic affecting the average Nigerian in terms of their job and their earning capacity, it's a huge problem. The government has to really increase in its palliative and ensure that the vulnerable people in society get what they are supposed to get. And at the same time, ensure that the companies are still able to produce while maintaining that COVID. Because if I have somebody who is a construction worker and is daily paid, and if there is an increase in we are not flattening the curve is still increasing. We are getting more and more
cases.
The task force might put another wave of another round of lockdown, and all that. It's going to affect these daily paid workers. You must interested to know that even in the financial markets, some of the financial institutions don't work Monday to Friday. They have specific days.
Yeah.
All this just to ensure that they maintain that protocol. And at the same time, they are also being afloat, because if they don't generate revenue, then it becomes difficult to pay staff who are working remotely. So we must do all we can, even we as citizens, to ensure that we maintain all the protocol of the pandemic, so that we will flatten the curve and more economic activities will go on. As we speak today now, I have an investor, a client, who runs an hotel, and he still complains that they make more money from nightclub and shows in the night. And
that cannot start for now.
Bad.
Still part of the caution. Yeah.
It cannot start from now. So, and because of that, they have told virtually all the staff in that department to stay at home. They just do sleep in, so they don't do that nightclub and all that again. So by the time we are able to flatten the curve, we follow all the protocol.
We can indeed return to some normalcy. Yeah.
Of course, exactly, to some normalcy, and these economic agents can perform, generate revenue, and pay their staff, to see the economy moving.
Mr. Charles,
the government is doing their best in terms of
Yeah, Mr. Charles, just in 1 minute, can you tell us what you see happening for the market as the rounding of the year begins? I mean, we're entering the Ember month from this month. The projections, of course, of how it's going to end, there are projections of -4%, apathy and others for the equities market. What do you see as 2 or 3 things that will shape the final quarter for the equities market? Mr. Charles, can you hear me?
Well,
yeah.
We have the equities markets. We need to do. Yes, I can hear you.
Okay.
For the equities markets, we need to do a lot of confidence building, first of all, as operators, and we need to do a lot of confidence building to see an improvement. In fact, the projection they are even giving -4. I'm even seeing that it might do even up to -6. But if we build,
to build confidence in the market.
At the same time, the macroeconomic environment, because the market operates in an economy. So if the government policies we are seeing, like we are being told now, the budget to be ready, that is the next year budget to be ready, and if all this is in place, and we are seeing some improvement in the economic numbers, of course, I still see the market closing the year a little below -2%. If all these guidelines are adhered to strictly, we must build confidence in the markets. The macroeconomic environment need to improve, and of course, the pandemic, we need to abide by the protocols. If all this is done our own part, I see an improvement in the market. But the challenges will still be there. We can't run away from it. So I see the market closing still below, maybe -3, -2.5, closing the year.
Thank you very much, Mr. Charles Fakrogha, for the time you've given us and engaging and discussing around the equities market today. We know that you're a dealer, and of course, you also train others. And it's nice to hear that you're able to train them amidst the pandemic, leveraging on technology. We hope to see much of those cooperations, particularly between operators and fintech players. Mr. Charles Fakrogha is the chief dealer for City Code Investment and Trust Limited. He has been discussing with us around the equities market on the WebTV Market Review Program. Thank you once again for the time, and hope to have you in subsequent editions.
Yeah, thank you for having me. Ottoabasi.
Yes, thank you. And that'll be all for the WebTV market review today. You can join our website, www.procng.com, to watch our videos, read our news reports and analysis. Just to all investors and the populace, this period, avoid any scheme that promises you 100 to 200% return that is not regulated or registered by the Securities and Exchange Commission. Till we come your way again, thank you for watching. Have a nice day and stay safe.